Hi everyone. Today let's talk about NVIDIA, then we'll talk about Pebble Beach just for a moment, then we'll take a look at the economic factors, then we'll look at the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the one stock that could decide the market outcome for the rest of the year is NVIDIA, and they are reporting earnings this week. This is the big player, and really it's the biggest news until we get to Fed Powell speaking at the end of the week. And Goldman Sachs thinks that artificial intelligence is going to bring about around $316 billion in market opportunity between now and 2026. And NVIDIA seems to be the biggest beneficiary of that market opportunity so far. And again, if they bring in a record-breaking earnings, just like they did in the last iteration, that could absolutely push markets higher for the rest of the year, being that big driver, especially for the NASDAQ. But if they miss, that could absolutely push us much, much lower in the short term. Moving over to Pebble Beach, I know this is not directly market related, but I did think it was interesting. These are the most expensive cars in the world, and we had a $30 million Ferrari sell. Absolutely crazy that these cars go for this kind of money, but that is where we're at, and it was interesting to see that market sales actually dropped 16% here from last year's record total at 473 million, and they say that the market has been cooling for vehicles like this for the past 15 months. Typically, you see markets like high-end expensive cars starting to tip lower earlier than everything else because these are obviously not essentials, and we are seeing that, and this is yet another piece of evidence that the amount of spending is decreasing across the economy. Moving over to the economic calendar, basically nothing on there for tomorrow. Existing home sales at 10 o'clock, fairly interesting. Fed Bowman at 14:30. And then don't forget we have Fed Powell speaking at Jackson Hole at 10 o'clock. Moving over to Max Pain for the end of the week. It's currently sitting at 442, so about a 1% move from current prices based on this level here at 438. Put call ratio still pretty high, 2.4. Total amount of options just under 900,000. Not a lot to speak of, but you can see that put wall 442, decent amount here at 436. And look how few calls there are. It definitely would not surprise me if this pushed a little bit higher as we finish this week. Moving over to the charts, starting off with the S&Ps here on the hour and the 4 hour, you can see we're starting to channel a little bit bullish. We're above all the shorter term EMAs and SMAs on the hourly chart. We tagged that 439.98 level just for a moment and then broke down into the after hours. As long as it holds in this area at 437.95 at the EMAs on the hourly chart, or even as low as the trend down at 437, that would be interesting. Hold this level, potentially look for another push higher. Of course, the 4-hour chart is showing us a lot of bearishness still. We're above the 9 EMA and VWAP. But this is still very much a downtrend. You can see that here. We're still below the 21 EMA, which is currently at 439.91. We didn't quite touch it, but if we were to get back into that level that we talked about, we would hit that 21 EMA, and that might be all she wrote for this rally. Certainly possible, but it is worth noting this consolidation and slight rally in the short term. Momentum on the 4-hour chart still bullish. RSI not quite above the 50 line yet, and this could be setting up for a bear flag. Just a couple of chops in here and then a bigger breakdown. That would be interesting. You do have to consider that. Overall, short term looks a little bit bullish. Longer term, still looking a little bit bearish. Moving over to the NASDAQ on the 15 and the 4 hour, I just wanted to show this because we did dip into the morning session and I got chopped around a little bit. So we dipped down. I was fine with the positions I had. I kind of expected that. Then we rallied and I tried to buy into the long before we broke down. I was able to flip pretty decently on this mid-session, profit a little bit on this move down to the 55 EMA on the 15-minute chart. And then as we started to rally, we flipped on momentum. You can see that flip here, pretty classic flip on momentum. And then we ended up following through on that flip. And that was a nice little rally into the end of the session. I took advantage of most of that. Everything looked pretty good. And you can see here on the 15-minute chart, we were above all of the EMAs and SMAs. So again, shorter term, looking pretty bullish. And even here on the 4 hour, we did get above the 21 EMA Obviously, this is going to have a bigger effect from NVIDIA, which we talked about earlier. A little bit of optimism going into that, and the NASDAQ is benefiting. If we get another push higher, you could look for 367.63. Right now, my resistance is at this 364.84 level. Both of these didn't look as strong as the NASDAQ or the SPY. Russell did set up a slightly higher low off of that level at 183.28, tagged that level once again, rallied back up to the 9 EMA. So this is now a low, higher low setup. Absolutely could rally from here. It doesn't look terrible. We hit that trend line and broke down though in the pre-market. So kind of consolidating in this area, definitely worth looking at. Momentum slightly bullish, RSI still looks weak. Similarly here on the Dow, rallied in the pre-market, hit the 200 SMA on the 4-hour chart, broke down to support, ended up holding support, hit the 9 EMA as well as that next level. You could argue that this is a double bottom, but it does look a little bit weaker than the Russell in my opinion. Moving over to the equal weighted S&Ps here on the daily chart, we talked about how on the Friday session we hit that 200 and rallied from that level. We threw another wick to the downside and rallied a little bit. Not quite a bullish candle, but momentum did step down. RSI went a little bit higher, still holding okay in this area. Highly traded zone was down around 145, so we didn't get there quite yet. I would have liked to see a wick low, hit that, and then get a nice little rally out of that. That would have been a bigger confirmation in my opinion. Extending this trend line out from this previous high, marking these highs and the candle break on this move. You could argue for a little bit of resistance, about $1 higher from where we're at now. Again, doesn't look as strong. 9 EMA sitting much higher than where we're at. Moving over to Apple and Tesla. Apple had another higher high, hit the 21 EMA on the 4-hour chart, also hit my level at 176.15. Definitely at some resistance. If it breaks and holds, we could look for that continuation up to 178.58 or the top of this consolidation around 179.70. That would be interesting. You also have the 55 EMA sitting at that level. Tesla, on the other hand, went bananas today, absolutely straight to the moon. We hit my level at 214 in the Friday session. We've been talking about that level for a while. Cut through my higher level like butter, went straight down to the next one. Hit that level and held, went straight back to that level, and you can see that's where we are after hours. This would have been a perfect call if I was trading it. I don't usually trade individual stocks very often, but this was a clear mark of why I watch these levels. Marked both of these moves perfectly. In terms of structure, momentum bullish, RSI bullish, everything looks clean. You want to see that level break before you look for a continuation. 55 EMA at 239.99. If that level breaks, then you can start to look for a push back into these previous consolidations between 255 and 264. Moving over to Broadcom and NVIDIA, semiconductors driving the market higher today. You can see Broadcom gapped up to 834 and then rallied all the way up to 865. Big move on the day. This is still technically a downtrend, but huge impulse, pretty decent volume, momentum ticking towards bullish after a pretty substantial amount of bearish momentum. NVIDIA, similar thesis, big gap up, big move higher. We are retesting this trend line that marked this consolidation, and when we retested that level previously, after the breakdown, retest continuation, that did look pretty weak. But now we have a low, higher low setup, big rally, big impulse, everything looks clean. If this level breaks, that would mark a new all-time high, take out these previous highs, and I wouldn't look for resistance until we got up to around 520. That would be interesting. Overall, semis driving the market higher, and this is what we're looking at going into that Thursday session. Moving over to staples and discretionary, looking at this big leg down on staples, retesting that 72.50 level. So this is a break retest, looking for a continuation lower in my opinion. Next level is down at 70.85, and this looks a lot weaker than what we've been seeing on staples. Overall, not great. Looking at discretionary here, you can see higher low setup, looks clean, big impulse, just like everything else. Bullish momentum here. Looking for that 21 EMA at 165.58 or next resistance at 166.78. Moving over to breadth on the 50 and the 200. You'll notice on both charts that we basically got very little movement. 50-day average, slightly green, just barely. So we're still in this consolidation at the 32.22 level. Threw a wick through that again, rallied a little bit. You can see RSI starting to curl up a little bit, momentum starting to curl up a little bit. Same here on RSI on the 200. Doesn't look as strong, wick to that level, did not end up bullish. So this could absolutely be a consolidation and a break lower. You do have to be careful with that. But overall, looking like we are showing a little bit of support at these levels, and I still think we should get a continuation on this pullback to the upside, but you do have to be a little bit careful because of this. Moving over to the 2-year and the 10-year on the daily chart, you can see both of these going higher. 2-year closing at its high looks pretty good, above 5%. 10-year getting above 2.25, up to 2.33, still looking more bullish. Momentum starting to cool a little bit. RSI getting overbought, but this is absolutely relentless. This is new highs here for the 10-year, which is interesting considering that we saw equities going a little higher today. Moving over to the dollar. Dollar cooled off a little bit, sold off, showed a little bit of bearish momentum, started to cool at the end of the session, hit this trend line, started to hold. Daily chart, you can see that's 3 days in a row of bearishness holding at that level. If this rising wedge breaks down, that could signal more bullishness to come. Momentum still moving lower, RSI still moving lower on the longer term charts. And this is looking a little bit weaker now than it has recently. Moving over to bonds, JNK and TLT. JNK holding this trend, still interesting, still below 91, and momentum ticking a little bit towards bullish, definitely interesting at this level. Might see a little bit of a pullback with the rally, hit these EMAs, and then get that bigger breakdown that I am still expecting. TLT, on the other hand, as the 10-year continues to go higher, we see TLT continuing to break lower. So another gap down into this 92 zone, and you can see that's right at these lows from the end of October of last year, which is the most recent low. If that level breaks, this could go much, much lower. Momentum still bearish, RSI hitting oversold conditions once again, and this trend is still super bearish. Moving over to the volatility indices, MOVE index breaking out absolutely looks bullish, meaning that we are definitely seeing some weakness on bonds. We just looked at that, but this is also confirming that and that it could go much higher. Clear breakout above trend. VIX not showing much of anything. We wicked that important level last week on Friday. Sold off a little bit here today. Still holding in this zone, so this could absolutely hold at the trend line, push higher tomorrow, definitely interesting. But like I've been talking about, I do expect a little bit more bullishness and that this would break down a little bit further as well. Moving over to my accounts, you can see I did pick up a couple of positions here in the IWM. I decided to roll out and down on that one put that I had to 182 out to 23 August. You can see I got some profits there. I was able to roll that out for a 1-cent credit, so I didn't take any losses on that, even with the bigger move down on the IWM. Overall, not bad. And then on the rally, I decided to pick up a covered call. Not great timing on that trade. We'll see how that one plays out. I'm a little bit more hesitant on the IWM. Like we saw on the charts, it did not look as strong as the other major indices. Definitely a little bit hesitant. We have a nice solid level at that 183-ish area, so if it does break down from that level, I can absolutely close all of these positions, and I will be looking for that breakdown if it does happen. I also have the Qs. I ended up picking up another covered call here. I actually traded this quite well, like I said, on the down move. I was short going into that move. I put on some calls to help capitalize on that move and cover my position. And then on the rally, I picked up that third covered call out to 360 for almost $2 credit. And you can see we ran up all the way to around 364-ish. We are pulling back a little bit after hours. You can see that here. And that's part of why I didn't roll this out any further. I want to see what this looks like tomorrow. If it starts to pull back a little bit heavier, I probably won't roll these out in time. I'll look to reset these positions and see how it goes. But if it does start to look strong, I might roll out or put on some puts. Either way, neutral on the Qs after the extensive rally that we had the last 2 days, and then neutral on the IWM as well. Let me know down in the comment section what you think of NVIDIA and what we're going to get for their earnings. Is it going to be another blowout, or is it going to shock the markets to the downside? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.